Good morning, guys. Welcome to this Friday, September 26th, last Friday of the month, last Friday of the quarter. Next week, we have a couple of trading days, then we are rolling into that fourth quarter. And I think that was part of the crazy stuff we were seeing yesterday, swinging hard, swinging wildly back and forth. Good trading stuff, but it's difficult to try to get any continuation on those kind of swings. Uh, Overall, though, we've been in 3 days of backing off the highs. So you can see you have the split. So we made new highs, 67.50s. We've been backing off 1, 2, 3 days, trying to find a spot to cut off the selling. We're still in stage two. So far, I mean, yeah, it's backing off and it's a little bit weird, a little bit feel. I mean, you never like it when it backs off like this, but it's not that big of a deal so far. If they start taking out this big low volume area below us, that's when you need to worry about the short side and a bigger correction pullback starting to develop. So now, are we going to get that today? Who knows, right? We do have news which could potentially set it off. We have news this morning, PCE, personal income and outlays, including that PCE index, inflation read. Then we have consumer sentiment at 10. But I think that the personal income number, that's going to be the one to watch. And depending on how the market reacts, if it's volatile but not directional, I think we have a good shot at potentially sticking at this attractor at 66.70s. Just had to watch this lower edge, 66.50 and down. It's from 66.50 down to here to the 25. So it's 66.50 down to the 66.25. This big area of support. If that area comes out, if they challenge that, it comes out. Yeah, stay on the short side because we are getting into more of a correction at that point, and we most likely could see a rotation all the way down here to that 64.70 attractor. That's your next one on the way down. Yeah, a small one right here at the 65.90s. But chances are we may retrace this all the way down here to that 64.70s. So that is very much real. We are in that part of the year, the end of September, beginning of October, or it's just kind of it's August, September usually is the worst part, and then October usually firms up a little bit, but October could also be a little bit wobbly. But at this part of the year, if it sees no weakness, it usually shows up. I had to say this so far this year, this period has been not bad at all. So I'm going to start off flat out range bound to get today. I would almost start with a bias to the short side, but you can see how from yesterday's trading, it traded up and really holding at the high end of the distribution from yesterday's day session. And they're trading right at that 66.70 little attractor. So I'm thinking starting off range bound today and watching that lower support area. If they start trading below that 66.50 to 55s, I'm going to be back on the short side and looking for further weakness down to here to the 35s and the 25s. But that's kind of how I'm get started. If they start trading higher, I'm going to be looking for short setups against the 70s, 80s, and 90s. 6700s and then 6715s for rotations back down. And that takes us all the way up here to almost up to that 6730. I can see it on the chart here, but up to this upper area, 6730s. So eventually probably going to fold this together. You can see that this is starting to become one distribution, a little bit of a low volume area in the middle here at 6680. So not going to be surprised if we start seeing them fill out this whole thing and start building it. I'm going to leave it split out for now, right? Just to leave it like this. Yeah, yes, for now, and then we'll see how this day shapes up. If we end up with a more of a range bound day where it starts trading in the middle here, I'm probably going to fold this all together into one distribution. But right now, I'm just going to keep it broken out for that. Shows us a nice, but they have a little break here, right at that 66.70 to 75s and that low volume area at 66.80s. So they can get up above that low volume area. I think we have a good shot at least drifting higher. If not, probably going to stay range bound. And if you start seeing them taking out that 66.50 to 55s, I would be thinking short out of the market and see how far they want to move this down here. If they're going to be trying to extend further to the downside today. But first, we had to get past the PC, the personal income number, and see how the market feels about that. That could be a big reaction. So if that reaction blows through all our estimates, it's either reacts big to the downside or big to the upside, it could change the dynamics altogether. If it's just volatile but not directional, I think we're right back to range bound trading, watching that lower in the 66.50 to 55s, and this upper low volume area at 66.80s. So that's how we get started this Friday. This is the last Friday, so we have today and then a couple of days next week, then we're right into the fourth quarter. So you can probably expect a little bit more volatility back and forth as big institutions rebalance this quarter, try to close out the quarter. I think that's probably was part of some of the crazy stuff going on yesterday. So we can probably expect more of that. It's always so some of those odd sell-offs or rallies which happens, which doesn't seem to they seem to be working for a short period and just kind of dies off. But that's usually what that is, I think. So staying off range band, starting off range band, watch that upper low volume area at 66.80s. Above that band, we'll start thinking about the long side. Below the 66.50 to 55, start thinking about the short side, or staying on, start thinking on the short side at that point. See if they want to try to extend further to the downside. And of course, let's see what the PCE number comes out as, the personal income and that inflation read. So a big reaction there. If that comes out with a little bit hotter inflation than you expect, I think the market's going to think really the Powell rate cut scheme may kind of falter, and that's going to be a big negative. So it's not just the number for the personal income; it's the fact that the Fed looks at it, and if they change policy or use that as an excuse not to cut rates, yeah, that's when you get the reaction in the market. So expectations game, and we'll see how that shakes out. All right, so that's the ES, looking at the Nasdaq and the bonds, the bond market. Okay, backing off the lows. So yesterday, the nice probe to the downside. The retest turned into a probe to the downside, and I'm thinking, okay, we're heading lower. So far, they're holding the 116 still in the overnight, trading back up. So if they can hold this, I'll be more inclined to start thinking about maybe retracing back up again. But they've been kind of working this lower edge down, still holding, and you can see a nice 5 letter edge. We got around 116, nice. So that's why I keep talking about that 116 edge. That comes out, I think we run right down here to the 114s, and but right now they're still kind of defending it. So starting off range bound on the bonds, I would be looking to buy against the 116s. I would look to sell against the 1612, 1616 up to the 1622s for rotations down. And if you can clear the 1622 level, I think I'll start thinking about retracement back up again and staying on the long side. So that's the bond market. But they've been slowly drifting lower. So, I mean, at this point, I keep my eye on it, and I would right now look to buy against that 116 level, but not much more than that. So that's not going to be very aggressive on the long side on the bonds right now. And then Nasdaq, that's guy which has been moving really violently. That has been moving. We ran this one all the way to 24,430 yesterday. Retraced back up. We at the 24,620 now. So Nasdaq a little bit feels a little bit weaker. They're already down here below this 630 to 700 level. They've barely been able to get up above it. Well, they're not even up above it. We have the 660s and the 700s in front of us. So that is kind of the if they kind of had to get up above it for me to start thinking range bound trading. I'm starting off on the short side when it comes to Nasdaq, so I feel a little bit weaker. It can pretty quickly shift if they get up above that 700 level. So initially looking for shorts against that 660 and 700, look for that early strength. And if they can't get up above it, well, then we're staying on the short side and see if they can challenge the lows, maybe even take it lower. Buying against that 570, 530 down to the 500s, a bit of caution. There is a nice volume edge here, which potentially could hold. If they keep going past that 500s, we are on the short side, staying on the short side. And I think we may be in a little bit of trouble at that point. But you saw yesterday's, I mean, how hard they ran it down here and how violently they retraced it. And then K period came and they did it again. So as the rotations going in and out there, so you get like a big institutional selling going on, and then they just stop it, and then you have a big institutional buying going on. So there you go. There you have it. Anyway, starting off with a slight bias to the downside on the Nasdaq. The ES, I'm starting range bound Nasdaq with a slight bias to the downside. I'll be back range bound above the 24,700s. And if they keep trading up towards that 800s, then I think we are solidly range bound at that point. Not necessarily going to start thinking about the big rally, but I think they are going to be entering stage 3. So quite a big question is this now the cutoff of selling from the high? So same story there, right? We've been retracing from the high here at the 25,000s, pretty good, 3 days in a row now. Let's see if they can hold the line today. And if we start seeing it bigger, then take out the low again, 4 days pulling back, yeah, well, maybe we got a correction coming or a small correction. So let's see how that shakes out. All right, so that's the Nasdaq and the bonds. Finally, oil and gold. The oil and gold is just kind of consolidating right now. They've been going back and forth. That is a pretty big move, all the way up to 38 and change, and now they backed off a little bit. Looks like they're settling in around about 37.80, maybe up to 3800 here. So we'll see where they actually settle in, but it looks like they're definitely in stage 3 right now in gold. But as you can see here, the bigger picture, big move to the upside. They went all the way up to 38.20, backed off all the way down here to that low volume area at 37.50s, and now they're back up, trying to find a spot to start building value. So starting off range bound on gold, looking to sell against 37.80s, 37.90s, looking to buy against the 37.70s, 37.65, 37.60s for rotations back up again. I would say below that 37.60s, start thinking short side of the market, still looking to buy against 37.50 and 45s. And above the 37.90s, start thinking long side of the market, still looking for short against 38.05 and 38.10. But they are a little bit to the outside, so there could be a directional move up there, which could be worth hopping on. Same with the downside. Could be worth a short trade below the 60s, running it down to those lower support areas. It's a pretty wide range right now. I'm expecting that to tighten up a little bit. All right, so that's gold. And then oil, I'm not doing much on oil lately, but it's maybe not up here testing the highs, they're up here flirting with trying to push high the upper end of the range. We'll see. I'm still looking for a short setup up here, see if they for a rotation back here to the 63, 64. So I'm looking to sell strength 65, 65, 40 for rotations down. Initially, since they are trading higher, buying weakness at the 65 or 64.70s, but not more than that. If they trade below the 70s, I'm taking off any early strength expectation, and that's going back range bound. Maybe even looking for that retracement back to the 63, 64s here. So in the bigger picture on oil, just to show you, we are in this area, upper area, and I'm just expecting a rotation back to that attractor. Now, could be a piece of news coming out which changes the pricing and pops it higher. It could certainly happen, but then we had to find a different attractor point to go to. And you can see it's not a whole lot. It's like more drifting over here, low volume area at 70s. So this whole area here looks interesting, you know. If I fold this together, it just becomes kind of hard to read. So I'm gonna leave that split out. I think that was an L split, yeah. Can leave that like that. It's a good break right here at the 64, 70, 80 up to the 65, 50, which you need to pay attention to. And you have this little attractor right here at the 65, 30 to 40s from that prior distribution. So we'll see if they take that out. You're going to be, we could certainly take this higher, but I don't see quite the reason just yet. So, but there could certainly be a piece of news out there coming which could change that dynamic. But I'm looking for short setup against this upper edge, see if they can run it down to that 63, 64 again. All right, we'll leave it there. So that's oil, gold. back to the ES, and we are got about 7 or 8 minutes, or 8 or 9 minutes before we get the personal income number. So then we'll see if this whole thing comes kind of blows up on us. It is a Friday, so trade with caution. Let's don't be too crazy. And we'll see you guys back at 11:30 for the next update. So good trading, guys.